What I'd like to talk about today is how I scan for stocks and how I put those stocks from a scan onto a watch list, and then how do I manage that watch list to include how do I set alerts. And so this is very important because this is, in my opinion, my system, right? So this is what I do on a day-to-day process, day-to-day system, week over week. This is what I do, right? This is my system. Without this, I would just be taking whatever I see, and I wouldn't be really dialed into my edge, which is trading momentum, basically trading gap ups and then pullbacks in high momentum stocks. So what are the stocks? What are the scans that I run? So the scans that I run are very simply, um, I trade on a week weekly basis. I run three scans: 1 month, 30%; 3 months, 50%; 6 months, 100%. Let me know if you can see the sketch pad. Yes, see it. Okay, so I'm running this scan every weekend. Okay. And I put this into um, a watch list. Okay. And so I'm not going to really add names or take away names from this watch list. I am going to just highlight um, which stocks are moving from the watch list onto the focus list. So that's going to be the real important part of this system and how I do what I do is I'm moving names from a watch list to a focus list when they deserve to be moved over. And so how do I determine when it goes from a watch list to a focus list? Well, we'll do a couple examples here. So these names are on my watch list. Okay. So there's, for example, there's no entry here for me. Okay. The stock is in a momentum phase. There's no tight action. There's no pullback. There's nothing. Okay. So this is going to stay on the watch list until it gives me some sort of sign of a pullback, some sort of tightness. Otherwise, um, it's going to stay on the watch list. So if I click through here, you'll see these stocks are high momentum names, not setting up, um, not giving me any sort of nice entry. And so I'll go over these names every single day and look for them to be moved to a focus list. So for example, a stock like TDD, which is in a momentum phase, had a big nice gap up. It's pulling in some. And so now I'm looking for an entry. It's starting to lose some relative strength here, so this might come off. But this is how I find um, pullback entries. This is how I find breakouts. You look, for example, QBT. This got moved over from the watch list over to a focus list, and I set the alert at the high of the consolidation. Today it triggers. So it's very simple. This is a very repeatable process. And so what I'm looking for is running my scans, making the scans as easy as possible, repeatable as possible, and then I'm moving from one watch list to another watch list. Now, from a day-to-day standpoint, I'm running a few other scans. I run a 10% change scan, I run a three times relative volume scan, and a week up 20% week up scan. And so what I'm doing is from there, I'm looking for high flyers, stocks that are moving very quickly, that have had that big gap up, had that reversal bar, which is going to be kicking off the momentum. And so these names typically are the very start of the momentum, right? So we're finding them here, right in the very kickoff. These weekly scans are finding stocks that are in this particular phase of the momentum, and then I'm looking for some sort of entry. So this is how I find it. If I run these scans, I will always find stocks that are either starting the momentum phase or in the momentum phase, and then I use my eyeballs and alerts to trade them. That is very simple. Please ask any questions in the chat if you need any clarification. Um, I'm going to be clicking through some charts and talking through them, but that's the system. That's how I do it. I find this to be super easy and repeatable for me. When I notice that the amount of stocks on this list is drying up, that's telling me that there's a shift in momentum in the market. And so, yes, breadth indicators and watching the SPY and all these things are very important. The number of stocks over the 50-day moving average, very important. However, most importantly is what makes you take them off the list. Okay, so a significant breakdown will kick them off the list. But generally speaking, um, if there's a gap up, right? You see like on Unon May 13th had this big gap up. This is going to stay on the list as long as it's holding relative strength. It doesn't really close below the 21-day moving average. They're going to stay on the this type of list. Typically, this is kind of an ugly action here. But it's still in that momentum phase. It's still in a high relative strength phase. Um, the earnings gap is still valid. The low of the gap hasn't been violated. So when I run the scans, they typically will stay on the scans. Starting to lose relative strength here, and like so. This is a good example. So this is very frustrating. Um, it had this big gap up. It's trading sideways, it's chopping up, it has a gap up, then the next day it has an ugly bar, but then it tightens back up. So this is very frustrating, but this is pretty typical um of what you see. You don't have to trade this sort of thing. If you want to trade something a little bit smoother, then take it off your list. But until this breaks down, it's going to get picked up on the weekly scans because it's in that momentum, right? It qualifies as a 30% in 1 month, 50% in 3 months. So this is going to come up on the scans regardless of this choppy, ugly action. So this is going to hit the scans regardless. And then it's just from there. So what I typically do is I put all of those lists in a watch list. I call it the bullish work list. And so this is a much wider list. And from here, I pick out my most favorite that I then mark green. And so that helps narrow it down a little bit. So for example, this shop, right? I had this pink as my focus list. I had this as a focus list coming in today. If it would have broken out the high of that big gap up day. This is starting to break down. It's starting to lose relative strength. So this is something that I would kick off. Maybe keep it in the bullish work, but definitely would not flag this as green or pink. So this wouldn't be on my watch list or my focus list. It would be on that wider watch list, which is that I'm not really looking at every day. I'm looking at the ones that are flagged every day. So I guess technically there's three watch lists that I'm working off of. The first watch list, which is going to be all of these names, right? Out of here, then I do a, a green flag, right? Then from there, I do a pink flag. So really, I'm working off of three watch lists. And so the pink flag is my focus list, the green flag is the watch list, but all of these names from the weekly scan get put into one other watch list that I then work out of to identify my favorite green. And then from the favorite green, what qualifies for an entry would get a pink flag. So that's kind of how I do it. And I find this very manageable. This bullish watch list has 391 names. I've narrowed that down to 69 names, and then buyable today is 22 names. I typically don't have 22 names that I'm actually buyable. That I think this has a few names I flagged for this video. Um, to give you an example, typically it's about 5 or 6 names. Um, and as I click through these, like this is a very good example, right? So it's in a relative strength phase. This is getting picked up, obviously, 75% in 30 days. So this is getting picked up on my momentum scans. And then, so typically what I'll do is, if I see it starting to pull in like this, I needed to pull into the EMA cloud some. I'm not willing to take an entry um, if it's not even testing. If it's just riding a 5 or 6 EMA, I'm not interested in that. So at this point, I would put it on a focus list and I would set an alert just so I can keep an eye on it. Set the alert from up there for kind of the top of the daily candle. And then what I'll do is each day progresses, I'm just monitoring it until it looks something like this. Now we're seeing some support here at the 508. Then I have my alert set for the top of that, and I'll take the entry as it comes through it. So when it's on this side, it's on that watch list. And then as it tightens up, and gives us a potential buy is when it gets shifted over, and that's where I set the alert. And I just set the alert through the high of whatever the consolidation is. QBT, this is a fantastic example of a breakout today. So this obviously hit my momentum scans, right? So higher ADR typically will always show up on my scans. Once it puts in this big gap up, I'm now looking for the next 3 to 5 days. So once it gets here, I'm going to set an alert for that high of that gap up, and I'm just keeping an eye on it. Oh wow. I'm just setting an alert for that high, and I'm just waiting for it to tighten up and then come through that. That's my delay entry. Um, Obviously, this um, day here yesterday, May 22nd. This is that reversal. So you have a much tighter risk if you trade it coming that first day of that reversal, opposed to trading it here. Because this is the first day of the reversal. This is the day that's breaking out, but the entry for the reversal, for the very absolute start of the new leg up is on the day of the reversal, not the follow through of the reversal. A lot of people want to buy here. I understand, right? Because you're clearing that daily pivot. But if you want to get the first day of the start of the new uptrend, you have to buy on the first day of the new uptrend, which is typically a reversal bar if you're thinking about trading these delayed entries. So this is what you want to do if you want to trade delay entries. This is how you would trade if you want to trade those breakouts. Light bridge. So again, so this is gonna hit all those scans, right? 30%, 50%, 100% scans. Um, and then what you're doing is you just monitor for tight action. You look for support. You see the support, and then you set an alert for whatever high the consolidation is. And then when it hits that alert, you have the ability to buy or pass on anything. And so um, this would have been a fantastic entry coming through this daily pivot because you're just starting the gap up. The If you look at your average range when it hit that daily pivot, it had barely went through half of its average range. Okay, and so that would have been a fantastic entry. I got the alert, but I was focused on other things, and so I passed. That is no problem. That is a part of the business. If you have any questions, please let me know in the chat. I still think it's just a few people in here. I'm not sure. I got like 12 emails to join. Somehow, only a few people showed up. So if there's any other questions, let me know. This is just a quick run through. Um, this is something, that I definitely would kick off the watch list. Um, it has this nice big momentum, but it's done nothing. It's not really tightening up. I mean, obviously here you have 2 days tightening up, but it's gonna have to really round out. That's pretty vicious sell. I do like selling off if uh it's only about 2 days of selling off, 3 days max selling off. We'll see if we can find some examples here. This is actually a fantastic example. So you have the gap up on HIMS. You have the next day it sells off, and then that reversal here. That's your delay entry. So I actually welcome a sell off the next day. Um, the most ideal is if sells off the next day and then has an inside day here. That really becomes a powerful setup for a delay entry, and um, and that happens a lot. You see that a lot. So that is something that I really like. I love inside days. I love to trade a high momentum name that has a couple inside days. Like this, for example, you have this high momentum, you have 2 days selling off, and then it just really tightens up here, super tight here. And then you can take that entry 433.8. That'd be a fantastic entry. Then you're totally not even worried about hitting this resistance up here because your entry would be so low. And that is what makes a profitable trader is low risk, high reward entries, which is how what you get when you trade inside days in a really high flyer, something like GEV um, a few days ago. So if you have any questions, let me know. Otherwise, um, I think I'm gonna call it. No other questions. Okay, guys. Well, I appreciate it. And I hope you learned something. If you're interested in learning more, you know, edible, yeah. So edible arrangements. So that was today. Um, so this came up on the that daily scan, that 10% change. So this had an 80%. So this came up on all of those daily scans, the 10%, the three times volume. This was on 4,700% volume. So this shows up, right? And so on that first day, you have let's just walk through this. So this shows up on your daily scan, right? So no entry here. You will flag it because you're interested in it, but you're not going to take an entry on it. And then so the next day, it has this big gap up, no problem. You can set an alert for up here, just monitoring it. If it comes If it follows through this next day, I'm not taking it. It needs to tighten up. That's a requirement for me. It needs to pull in. But I set the alert. It's free to set the alert. The alert goes off. I have discipline and control, so I can ignore it. So what happens the next day? So the next day, oh, I don't know why I did that. So the next day it gaps down, holds the top of this. Not that interested in it. Um, Not even really paying attention to it, but I have that alert set. And then what happens? Um, The next day, again, not much, but it is showing some tightness and some support. So you could then add another alert here, or you could move the alert down. This is something that definitely is no problem. And then what happens? The next day, what happened here? Oh, that's today. Okay, so my bad. So you have your gap. So you have your alert set here. You would move the alert down here. And then today you get let's do it. Yeah. So you get your alert here, it triggers, but then it comes down. But it is not that big of a deal. These things happen, they squat on you, but that is how you would do this if this worked out, obviously it would be a better example. But you have your momentum, you have your alert set for the top. It gaps down. It shows some sort of support, obviously, from the high of the day here, and then you just move your alert down, and then you take the trigger. Obviously, it didn't work out, but you can see with millions and millions and millions of examples that this sort of thing works. This is the process. It's repeatable. It's not going to work every time. Um, so that's how you do it. You can look at something like Dave over here. You have this big high momentum. You set your alert here. It has an inside day, so you would set your alert here. It starts to show some tightness, and then you're just looking for a little area where you can trade off of, and it's repeatable, right? It happens with high quality names like Uber. It happens with, for example, here you have this nice inside day. Here you have the momentum. It pulls in, shows support, and then you have your entry, bam, 84. And it happens with junk, just like edible arrangements. Where's set stop on this? Yeah, I mean, I always just do low day. If it's a high quality name, if it's something that I'm interested in building a big position in, I'm using the consolidation. But if it's just a junker, like edible arrangements or you know, this worked out really nicely. You have this nice inside day here. But this isn't something that I'm gonna build a huge position in. And so if this was a high quality name, um, even if it's up a lot, yeah, I mean typically low day, but you're gonna move the stop to break even. Um, if it's a big range expansion that day. So like for example, like this, you have your inside day here, you take this entry. As soon as it moves up, you're going to take partials and then move your stop to break even. Uh, that's just the way it goes. This was another example. I squatted on me, just so that you see that not every one works. This squatted on me, but yeah, I used the low of the day. Unless it is a stock that I'm really interested in, then I would use a consolidation low. But that's pretty rare. Most of the time, these things are kind of junker stocks. But occasionally, when you get something like a Palantir, like I traded it on this day on that big. So I had the gap up. I moved my stop to the high of that bar, and then it had that really beautiful range expansion delay entry. And then so if I'm down here, typically I will take a partial or move it to break even. The idea is to improve your worst case scenario as quickly as possible. And to do that, you either take partials or move your stop up or do a combination of the both. So if there's any other questions, let me know. If not, then we're going to end the call. Like I was saying before, if you have more questions or you want to join the Voyage group, this is what we do. Um, I have links in the link tree on my Twitter and everything else, and I'm happy to help. And of course, you have my email, so just let me know if you have any questions, and I'm happy to help. Okay, thanks, guys.